Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to do our daily technical analysis update of commodities in general, dollar, 10-year yield, and walk through all the different commodities. I'll give you my financial opinion based off of the short-term charts. Long-term, I'm a big commodities bull. Could we see a recession between the beginning of this bull and the end of this bull? Yes, we could. We could see even multiple ones. I probably think that's highly likely. Energy is going to be the driver of the recessions. So I'm very much energy driven. And in terms of my investments, energy focused. And I think it's going to be inflationary because of the energy problems that we're encountering around the world. And I think that will lead to recessions and a lot of volatility in this next bull market of commodities. So let's dive in. I'll give you my opinions here. I've got the dollar, which is the DXY, which is a relative strength indicator. It was a little bit lower today. It looks like it wants to top out a little bit and head lower here. That's why there's a big wick at the top. And we've got kind of a downward trend line maybe coming through this region there. Something on the lines of that. We'll see how this plays out. It's still early, the pattern in development going on over here, but that's what we've got right now. Just a small little down there. The 10-year yield remains resilient. We've got these big three. I call it the big three here of these large up candlestick impulse moves higher. And it's almost as if someone's trying to hold this thing down in between. But buyers are still in control, or I should say higher yields are in control, which is selling pressure in the bond market. I know it's inverse. Yields go up. Bond prices go down, so it's selling pressure where the yields go up. So the selling pressure still is there, and I think that we'll go higher in yields at this time. I see no reversal selling pressure candlestick in this region. Just looking at bonds, this is the 20-year bonds. They were basically sideways today, and it still looks like to me that it wants to go lower. There's not a lot of buying pressure yet, and we've got this large selling candlestick there. So I think that this will potentially head lower based off the candlestick patterns, based off of the rising wedge that's broken to the downside, and we are in a strong downtrend movement with momentum. Strong selling pressure for bond prices on the 20-year Treasury bond ETF. Looking at commodities, we are still in this pullback. And are we going to get what I wrote in here? Oops. Delete out of here, people. This is kind of like an A, B, C correction, which could be a possibility. Where we end up somewhere in this region down here. We're going to get one heck of a buying opportunity, potentially. I'm starting to see some weakness in oil still. That recession and the fears of recession, and maybe possibly being in one, is weighing on things. So A, B, C correction is what I think may happen. And we're seeing in gold, getting a little bit of selling pressure here. We are on the trend line of this guy right here, this big boy trend line. And we're not really in a bad situation here. This can sometimes forecast inflation, deflation. It's still very high. So I think it still looks just fine at this moment. Silver, slightly lower today. We do have a little wick at the bottom. That is right here, this little wick. We've got the broken downtrend. Still looks good to go higher in my perspective, the way that I'm looking at this. And then platinum was up a little bit, basically a flat day. We had a monster down day yesterday. This usually means that you want to go lower in the short term. So I think that the momentum is lower in the short term, so we could head a little bit lower. But we've broken the downtrend. We're above support lines. This is just kind of flailing around in the short term down here. We do see lower highs, and we do see lower lows, and we're still in that downtrend in the short term here. That downtrend has not broken yet. But eventually, I think it will break. Because of the market conditions and the way that assets will be priced under an inflationary environment. There's a whole thing on that, separate topic, but we're in an inflationary environment. We're getting a pullback within that inflationary environment, much like the early 2000s and that recession in 01, 02. I think that's happening actually right now, and we'll call it the new recession of 2022. XAU to gold ratio, this is the miners versus gold. It's broken its downtrend. It's still hanging out here. I think this still looks good to go higher, which means that gold and silver miners could outperform gold in the short term. This is positive for gold to go higher. It's positive for inflation to go higher and all that stuff. So if we were in some blowout recession, when I think it's already past us, I'm hoping, again, nobody knows this for sure. That's why we've broken this downtrend. If we were still in a recession, this would still be downtrending. But it's looking a lot better. It's broken out of that downtrend. Things are starting to gather up here in terms of a potential move to the upside, which makes me think that we want to go higher. Looking at SILJ just, it's broken downtrend above support, and we are tracking sideways. GDX is doing the same thing. Broken downtrend, we're tracking sideways. This still looks good to go on higher. The momentum's getting worked off. We're working sideways here, and then we're putting in a little bullish engulfing. It doesn't look that bad to me. So it's still looking good there. Crude oil selling off a little bit today, down 2.83%. Where I get a little bit suspect here, and I know they got these SPR releases. They released some more information that day there. That big down day, they released, we're going to dump 20 more million barrels of oil on the market. You can look at this from two different perspectives. This is the way that I look at it. I think that this is bullish, the entire setup in oil and natural gas. The whole energy crisis is completely bullish in my mind. Now we're going to talk timeframes. Timeframes, we're releasing this Strategic Petroleum Reserve. It started here in March. It started there. They've been releasing. They want this oil to go lower before those elections. They tell us that. They're trying like heck to get this to go down. Now, that is our opportunity. Our opportunity is if this continues to go down somewhere in this region, 82, 80, 77, wherever they can push this thing down to, I think it's going to be one heck of a buying opportunity in oil and natural gas stocks. And I will be loading up. Obviously, I've got the Platinum membership in the description link below if you're interested on what companies I am loading up on. I've got a strategy. You can ask about that strategy at the question and answer session Sunday at 5 p.m. Mountain Standard Time for the Platinum members. But I think they could push this a little bit lower. I've got some excellent stocks I think I'm going to load up on still. I've got big stakes in them already. I'm going to load up on them again if they push this any lower. And I think September, October timeframe will be that timeframe. Natural gas, I was hoping that this would pull back. And I know that sounds weird. Why is he hoping for investments that he's in to pull back? Because I want to buy more. Now, this guy here is very strong here. We've got strong resistance there. We're getting into that seller box. I call this the seller's box where we get up here, we sell off, we sell off. Now this, you could say that this is a cup and handle pattern coming in here. Now I want to clear and get above, $10 is a good spot to close above on. Are we going to hit $10? Well, I can tell you this. Over in Europe, they are way past $10 a million cubic foot. They are way past. So I think that we will definitely close above 10 at some point. Is now that point? I don't know. I don't try to play the short term. I don't even try to predict this stuff. I just know that Henry Hub is going to converge with international pricing. And international pricing it's way up here, guys. Yeah, I'm going to still go. It's up here, guys. It's somewhere up there, and it continues to go higher. So it may be somewhere like in this range, 30 to 35, somewhere in that range. I didn't look recently, but it has been going up. And Henry Hub looks really good for a move higher here. It's finished quite strong. We've got the big green candlesticks. Everything's in alignment for the buyers to try to push it higher. This could reverse at any time. It's ultra volatile. And I'm hoping that we get a pullback so I can buy more shares. XOP, yeah, you know me, down a little bit today, basically flat. Again, we've got some resistance in this general vicinity. Oil was down, natural gas was up, and XOP was confused. It's a up down all around. But if we get a pullback in some of my favorite stocks, if this pulls back here, I'm going to be firing off some more. And I'll let everybody know on the website, if you remember, when I'm going to be firing that off and picking up more shares. OIH, this is the energy service companies, a little bit down today. We could pull back to this support line back here. Again, we'll see what crude oil does. And I am still an ultra bull in this entire sector. So we'll see what happens. We could get a little bit more of a pullback. If we get that pullback, I'm going to be a buyer of my favorite energy service companies. Looking at uranium, uranium futures pricing, we're just moving sideways in this little pattern here. Everything's holding together quite well. Buyers equal to sellers. Energy crisis is still game on. Oil is getting a little bit relaxed, coming back, and we got natural gas going higher. Kind of a mixed bag for energy in general. Looking at the Sprott Physical Uranium Trust, we're still above support. We've broken the downtrend. Everything looks A-OK. I think it looks good to go on higher. Buyers are still in control. Uranium also just moving sideways here. I still think everything looks okay. Downtrend line break. We've got support underneath us. There's no reason here to be panicking. There's no large selling pressure really in here. I mean, there's a little bit right here, and then that might be the follow-on little sell-off, but it's not selling off dramatically. We're not getting these large down candlesticks like this, or we're not coming up into a bearish engulfing like that one in that point. At least not yet. I don't see it. And CCJ, we're getting some positive development in a couple other companies that are moving higher within the sector. And a lot of them, they're putting in, they gap lower and then they come back and they get buying pressure throughout the day. We got a nice big bullish engulfing there. We've got small down days right after it. That is a ingredient for a move higher for Camco and all these other companies. So I am still in the bull camp. I think everything still looks great for a potential move higher in the short term. And again, remember, we're just playing with statistical probabilities, but everything to me still says game on. Scrolling down to TAN getting a little bit of selling pressure up here. We do have a bearish piercing pattern here. It was responded with a bullish piercing. So the buyers and sellers are basically dueling it out here. Big picture view, though, if you back out, we've broken the downtrend here, and this looks like it wants to go higher. So irrespective if we get a little back test here before going higher, I don't think that really matters, not at least to me. Put a strategy in place where you can maybe perhaps cost average in and reduce that volatility if we were to get some volatility on a return move, if it goes back and does a return move. That's an if. We don't know for sure, but that's still, it's broken downtrend. Everything looks good. Looking at COPX, this was one of the areas that I liked, that I talked about in our question and answer session. Downtrend break, we've broken it. We've been moving sideways, and then we're starting to get some buying pressure and momentum to the upside. So I think COPX looks good. In a recession, would this be moving higher like this? We'll see. Maybe we come up and we hit this resistance line and fall back lower. But looking at some of the companies, they are strengthening quite a bit. And I think they're starting to pull themselves up with a little bit of momentum. So that looks good. Buying pressure and momentum is what I'll call it. Scrolling down, looking at something like rare earth metals, this still looks fine. I don't see any reversal candlesticks in there. So I don't think it's going to go lower. I think, sideways to higher with this momentum still looks like it's in play. Bigger picture view, we're bouncing off this support line, looking like it wants to go higher. So I'm still of the ilk that we are going to go to the upside, and the momentum here looks good. Lithium also getting some momentum to the upside. Now, kind of zooming in here, and this is where things could get difficult. If I take a kind of a bigger picture view, we really want to clear up in this range here and close above that to get out of this. Could we hit this and come back lower? It's a possibility. Depends what the overall markets do. But right now, lithium has the momentum to the upside. There's no candlesticks that are reversal looking like it wants to go lower. I'm still of the kind where I think it's going to go on higher. It looks good. Going down to the S&P 500, we are coming up to some resistance level in here. So we got to see if we can break through this. That's really our next feat. We do have some extra, we'll call it like in this general vicinity here, we've got an extra mark through here where we've traded in this general vicinity of some trading in this general area in here. So we have to break through all of that resistance as we come up through it. And then we've got the US Composite Index. That's broken its line up here. You know, I wouldn't be claiming victory yet. It's got to hold. It's got to get moving away from here because the S&P 500 is still, quote, its head is still underwater. It hasn't broken out of its pattern yet. I would say that we were, we're in the clear when they both break above it, hold above it, and get moving. But this could be a throw over top where we eventually work our way lower. And I'm not claiming victory at this time yet. So that's the U.S. Composite NASDAQ Index. XHB heading higher here. This is a very good thing. Why? I know some people are very bearish on housing. Very bearish. There's bears all over the place. They're hibernating everywhere. But the home builders ETF is heading higher. That is a positive sign. We've broken the downtrend. We're still moving higher at this time with that momentum. If we were in some gigantic, we'll call it bear market, I don't think we'd be seeing the home builders ETF rocketing higher like it is right now. If you were to look, you'd see it like in 2006 when they had that crash. It was coming down and we had these bounces. That was just heading lower and lower and lower all the way and bottomed in 2009. This was a large consolidation period. We've broken that consolidation period to the upside. We're doing a return move. And in my opinion, I still think we look okay. Now, am I smoking the ganja or something here? I don't necessarily know, guys. I just don't see it like everyone else. Maybe I'm missing something. But maybe I'm really slow to act. I'd like to see more data. I want to see that interest rates remain high. I want to see that the inventories come back above 6 months. I just have to see all that before I start to believe it. Otherwise, I'm going to remain a bull until the data tells me otherwise. Looking at, lumber continues to move higher. That looks good for a move higher. Big buying pressure, small selling pressure, bullish engulfing. Lumber wants to go higher. Another sign that there's demand for lumber. Wouldn't this thing be, crashing out if we were in the housing market crash? Much like 2004 and onward, we had a big crash. Now, this has had extreme volatility, probably both aided by demand and supply in both directions. Demand getting disrupted in 2020. Demand and supply being disrupted. Demand coming back faster than supply. Demand coming back and supply maybe equaling. Difficult to say, but we are still within this pattern. Everything is still in control. Doesn't look out of control to me. Now, cocoa futures heading a little bit lower today. Is this that return move from the breakout or the gap fill? Probably yes. Still looks bullish to me on a short-term perspective once this gap fills or we do a retest. Wheat still above its support line with a broken downtrend. Broken downtrend, above support, I'm bullish. And I'm going to remain bullish until it breaks. Soybeans just chopping back and forth. A little bit more selling pressure today with a little bit more oomph to it. We'll see if this line holds. We've got corn. Again, we've been bouncing in this channel back and forth. It's still in the channel. And then we've got copper. Copper's remaining quite resilient, broken downtrend. A bigger picture view, we are down here. We kind of broke out, said, hey, look, we're Hercules. And then we came on back. We weren't Hercules. We got hit, got kicked in the nuts or something. Came on back, and now we're looking to turn. Broken downtrend. We're trying to get some momentum up here. We'll see. Again, sometimes these things peter out. We don't have a ton of large buying pressure through here. It's still kind of somewhat muted. But we'll see if we can continue higher. Palladium looks like that thing's just, oh, that's not palladium. I was like, what the? Here's Moo. Moving higher. Moving higher. Broken downtrend. Everything looks good here. I don't see anything bad. This looks good to continue higher. And a lot of the companies are also moving higher in that area. Aluminum, still trying to put in that bottom. We're just chopping sideways. I think it will put in the bottom and start to move higher. If that's the case, we've got copper moving higher, aluminum moving higher. It doesn't seem to me like this is necessarily the market's pricing in a recession. That recession or that move, I think, is already priced in. If we were still going, maybe it comes in and resurges again. I just haven't seen it yet. So I think the recession and whatever's been out there has been priced in. I'm looking for buying pressure, and right now we're trying to turn things around, and the buyers are stepping in. They're just not coming in at full force. People are being probably cautious here. The Baltic Dry Index still heading lower on a weekly perspective. Daily, it was down too. So we're down there, and this is looking a little bit more bearish than before. Looks like the Chinese over there are having some problems, and there's a little bit of bearishness in the Baltic Dry Index. So that's what I see today in the overall commodity sector. I am an ultra bull in energy. Ultra bull. And I'm an ultra bull in precious metals in the medium term. Ultra bull. I think if we have energy problems, much like the 1970s in America, we had gold priced in dollars, silver priced in dollars go up dramatically. I think in a similar scenario with an energy crisis worldwide could happen again, and currencies could get strained. So people, I think, will run to precious metals at some point. What will be that exact point? I don't really know, and I don't really care. It doesn't matter to me. I can't control when that happens. What I can control is buying these things, positioning, position sizing, my strategies. I can control all of that stuff. And I can see, at least in my opinion, I am thinking that the energy crisis is going to strain economies and currencies. GDP won't be as growing as much. And I'll do another video, I'll release it tomorrow, on the crisis, I think, in oil that's coming. And we've got a crisis in natural gas that's already here, crisis in coal. It's just the whole thing in energy is just messed up. And if we get into war, I'm not really going to talk about war much, but if there is a war, they're going to be hitting energy probably. Energy and currencies. It'll be kind of like a currency crisis or currency wars. And I do think that it's coming. So I'm positioning mainly in precious metals and energy. Those are my main bets. Yeah, I still have some, copper and some fertilizers and stuff like that. I still am long. I'm not changing anything out of those. But that's kind of what I see. And I will be bringing on Doomberg. So I got Doomberg. I'm going to ask him a lot of, I don't know if they're difficult, but I want to get his viewpoint on energy in general. So I really want to see what his opinions are on energy, and I'm going to ask him some questions around energy and the pricing of assets. All right, guys, that's what I've got for today. Thumb up for the content. Subscribe to the channel and the website. The website below, Platinum membership if you'd like to join. Lots of good ideas on investments around these types of markets. I do think there's going to be a lot of volatility out there, guys, so strap in, get ready, and it's going to be a wild one. The bull's going to try to buck you off, put it that way. We'll catch you next time. This is Finding Value.